Welcome to the Loner Ranger Radio Show. My name is Bruce Woodburn, and yes, I am the Loner Ranger. Cross Country Mortgage, been in the mortgage business for 32 years, closed well over 9,000 transactions, still at the same location for the last 20 years here in Winter Park. Hosting 2 radio shows, one today, Sundays at 11. You may be driving home from church, on your way to church. This is a great time. I really appreciate you guys listening to my show. What a great time to be in the real estate market. Anybody who bought real estate is making a ton of money in this market. And, you know, I preach that buying real estate is the way to amass wealth. There is no such thing as a rich renter. So if you're renting right now, let's stop you from renting and help you become a homeowner. All you have to do is pick up the phone and call me at 407-706-3313, 407-706-3313. I am the Loner Ranger, and my job is to help you become a homeowner. And today we got a couple of big topics I want to talk about. One of them is going to be getting in the market as a first-time home buyer and the challenges that we face. And I have in the studio with me today one of my all-time favorite loan officers and my son, Chase Woodburn, who bought his first home last year and has already made a ton of money on it, and is here to help guide you through what a first-time home buyer can experience, what programs may be available for you so that you can navigate this. Because to be honest with you, if you think that houses and the price of houses are getting out of reach for you right now, they're not going to be better next year. And they're definitely not going to be better the year after that. But we're also going to talk a little bit, and I'm going to prelude this conversation by what's going on in the housing market in terms of rent. So I've got this article from Gail Pascal Brown, who is a reporter with West TV here in Orlando, Channel 2. And she had done some research and has found that 39% of households in Orlando metropolitan area are renters, 39%. So that means that about 60% of people are homeowners. That's pretty positive for the homeowners part. But here's the thing. She did a report, and she was taking information from a woman by the name of Shannon Nasworth, who is the CEO of Ability Housing. And they had reported that in 2020, according to the University of Central Florida, that almost 70,000 metro households in Orlando and surrounding areas earn 50% of the area median income or less. 50% of people that are renting are making less than the median income in the local area, which is pretty devastating. And she asked if that was sustainable. And of course, Shannon says, no, of course it's not sustainable. Well, here's the thing. It's very difficult to get ahead when you're a renter. And it's really difficult if you're a minimum wage earner. And this report was stating that if you are making minimum wage, you would have to work 117 hours a week to be able to afford the average 2-bedroom apartment, which is going for $1,321. There's your average apartment. So if you think that housing is getting out of reach, wait till the rents start catching up with you. If you don't get into the housing market now, you could end up living back in the spare bedroom at mom and dad's house or grandma and grandpa's house, or having to live with several families all together. Now, listen, I don't think that's really good, and I don't think it's healthy. So you pick up the phone, you give me a call at 407-706-3313, and I'm going to help you segue from being a renter, which will never get you ahead in life, to being a homeowner. So we already know that rents are going up rapidly, but houses are going up too. But at least if you buy a home, you're going to make money. So with me, I promised I'd bring to the radio show Chase Woodburn, my son, my firstborn, very proud of him. And Chase, welcome to the Loner Ranger Radio Show.
Hi, thank you for having me.
So Chase, I'm so glad to have you here because you bring so much value to the young person Why did you think it was important? You bought last year, right?
Yes, it's been a year now.
It's been 1 year.
This month.
Yep. So, and you paid under 250,000, I think, for your house.
It was 245.
245 for your house, and that was even a struggle because I remember you were even having trouble finding a house for under 250.
Yeah, exactly. We wanted to be by UCF, and finding a house in that area for that price was a bit of a struggle.
Yep. So, but you were able to find one.
We were.
And then you actually helped structure your own transaction, and you found, because I originally said, well, just go FHA, and you did some other research, and you found that there were some other programs. Talk to me about some other programs that you think might benefit some other young folks out there right now.
Definitely. So I went with a program with Fannie Mae called Home Ready. So Home Ready is a fantastic program for first-time home buyers because it's a 3% down program, which is 0.5% less than FHA.
But you might need that for some closing costs.
Exactly. You might need that for some closing costs. The big thing with me that the Home Ready program allowed for was border income. And we've talked about that before. But border income is essentially a lot of young people. We would like to have roommates, right?
Yep.
So what I was able to do was I was able to carry over a roommate and have a lease for my roommate that I had previously been living with for a year. And I was able to use the rent that he was providing me as supplementary income.
Okay, let's just break this down. So you were renting a house prior to you buying a home.
Correct.
And you had other roommates.
Yes.
2 or 3 other roommates.
I had 3 other roommates.
Correct. 3 other roommates. But you elected to collect all of the roommates' rent and then pay the landlord yourself.
Correct. So it was like they were subletting from me.
But they were on the lease
But
too?
they were all on the lease. Correct.
So they weren't really subletting, but you were controlling to make sure the landlord was paid on time. And you didn't know that was going to work to your advantage, but it ended up being a huge advantage for you. Because then you were able to take on just one of the roommates that rented from you, right? Or rented with you.
Correct.
And then use the income that he had been paying you, that you had been paying your landlord to help you qualify for this new home because your debt ratios.
Exactly.
Right.
There's an extra $450 in monthly income.
And that was what pushed the deal over the limit and made it qualify. So your advice is that if you have roommates and you're responsible and you also had good credit, mom and dad brought you up to always have good credit, pay your bills on time, keep your credit cards to a minimum, pay them off at the end of each month. So you followed that step in even though you didn't have a lot of credit, you had good credit.
Correct.
So the combination of good credit and border income and finding a low down payment loan through Fannie Mae Home Ready program, which you help people with all the time on that.
I've done a couple more of those now.
Yep. But did it give you, are the rates competitive on that, or do you have to pay a higher rate?
The rates are spectacular on them. So, with this Fannie Mae program, I saw when I got it, it was a 3%, and I paid less than a point on it. I paid about half a point on it.
To get the rate to 3%.
To get the rate to 3%.
On a first-time home buyer program with 3% down.
Correct.
Okay.
So I've noticed that they are about half a point lower than your standard conventional loan.
So when rates were at 3.5, you were at about 3.
At about 3, correct.
Okay. So now I don't want people to think that they're always going to be a half a point less, but they are lower.
They're consistently lower.
They're consistently lower than a prevailing rate for even somebody that's putting down 10 or 20%.
Exactly.
Now, you had to pay private mortgage insurance on that as well.
Yes, but it is lower. So you're
covered. Lower than what?
It is lower than the equivalent 3% down, 5% down, even 10% down MI coverage.
So wait a minute. So you're saying even though you only put down 3%, your PMI is at a lower factor than somebody that is not a first-time home buyer getting a traditional mortgage
at 10% down.
At 10% down.
Correct.
That's insanity.
Yes. So if you remember, I crunched the numbers for it. Pound for pound, 3% LTV without doing the Home Ready program versus 3% LTV doing the Home Ready program,
Right.
it saves a well-qualified buyer on average $75 a month
That's crazy.
between your PMI and your interest rate.
That's pretty, and that was on a 245 house.
245 house.
Okay. So it could be as much as $100 on a $300,000 house.
Potentially.
Now, have you bought that house almost exactly a year ago?
Correct.
Okay. And you paid 245 for it.
Correct.
And you were looking up values just the other day. What's it worth today?
I was seeing 285.
285. Okay.
About $40,000.
So you've made about 40 grand in 1 year and you would have been paying rent anyway.
Exactly. Yeah.
So now you've got a roommate. You've got two roommates
Yes.
helping you out, right?
Correct.
And I think one roommate's moving out
And another one's moving in.
and another one's moving in. So you're getting other people to help you defray some of the cost.
Correct. So my strategy is that I qualified with one person helping me pay my rent.
Right.
So I am not necessarily collecting any income off of my roommates. We kind of just split it right down the middle 3 ways. But I take the extra money, which is about $450 a month, and I put that towards my principal. So
So you're prepaying your principal.
I'm prepaying principal.
Okay. All right. So I want to talk to you about that because that's not my Leapfrog program and you're in my Leapfrog program. So I like the idea that you're reducing your principal, but you're only at an interest rate of 3%. Do you have money in the stock market right now?
I do.
Okay. Are you making more than 10% on your investments?
Some of them, but not a lot.
Okay. So I'm seeing people making 15 to 20% in the market right now. Even if you were making only 7%, you'd be better off to save that money and put it in the market. Now, why do I want you to save money rather than pay down principal right now? Now, that's not in the future, but right now, why do I want you to do that?
So I can buy another house.
So you can buy your next home. So now, why are you considering buying another home? Why?
I'm considering buying another primary residence in the near future so I can fully rent out my current residence.
Okay.
And then collect some.
So you'll have a rental property at a 3% interest rate. And how much are your payments on that house right now, including taxes?
$1,297 all in.
How much could you get for rent if you rented the whole house out?
Easily $1,500.
Easily
I could rent
$1,500.
it in a week for $1,500.
So now, when you do that, that's when the whole $1,500 goes toward the payment.
Correct.
But right now, I want to make sure that you've got enough money in the bank to buy that next property. If you have questions for the Loan Arranger or you have questions for Chase, he's on my team, you can call us here at the office. You can reach me at 407-706-3313. That's 407-706-3313. Or just log on to our website and do an online application. Super easy, very secure, emails you a checklist of documents to provide. Then we'll get one of our loan consultants like Chase Woodburn or myself on the phone with you to guide you in the right direction so that you can make the right decision and you're informed as to which program fits your needs best, because sometimes FHA is a better program for first-time home buyer. And then are you also familiar and helping clients with USDA?
Yes.
I know you closed a USDA. How much is your down payment on a USDA loan?
Zero
down payment and reduced mortgage insurance.
Correct.
So there's a lot of opportunities for people that may be discouraged based on the prices of homes going up. Okay. And if you listen to my show, you know that I don't feel like houses are going to come down in price.
Right.
I don't think that with the inflation that we're experiencing that we're going to see any reduction in price of homes coming anytime soon, even though lumber is starting to settle back down in price a little bit. So when we come back, I want to talk a little bit more about some strategy that our listeners and how adult people can help their adult children and grandchildren become homeowners. We'll be back in 5 minutes with more of the Loan Arranger Radio Show. Bruce Woodburn and my guest today, Chase Woodburn, helping first-time home buyers. We'll be back in just a few minutes.